Hey everyone, welcome back to Corporate Decoder. Today we're diving into a document from Ouster, a company that's hoping its stock price goes up, unlike its recent history. We'll see what's happening at that annual stockholder meeting. It's not quite as exciting as a summer blockbuster, but it does involve voting and potentially big changes. So grab your popcorn because we are about to find out what's going on behind the scenes and try to see past all of the PR fluff in the details. This document is essentially a proxy statement. That means it's information sent to stockholders so they can make informed decisions about how to vote on important company matters. It's like a cheat sheet on who to vote for and why. Think of it as the company's attempt to influence the outcome of those votes. The big items up for a vote include electing directors, basically choosing who will be on the board that steers the company. There's also a vote on ratifying the appointment of the company's accounting firm. It's like approving who does the company's taxes. They will also vote on executive compensation, which is approving in an advisory way how much the top bosses get paid, and a vote on whether to protect officers from certain lawsuits, which we'll talk about in more detail. This section answers some basic questions about the meeting, like who gets to vote. If you owned Ouster stock on April 21, 2025, you're eligible. It also explains the difference between holding shares directly and holding them through a broker. If your shares are held in street name by a broker, you still get to vote, but you need to get instructions from your broker on how to do it. Here, Ouster is asking stockholders to elect 3 Class I directors, Christina Correa, Stephen Skaggs, and Ernest Maddock. If elected, they'll serve until the 2028 annual meeting. The board is divided into 3 classes with staggered terms, so only a portion of the board is up for election each year. The board recommends voting for these candidates. Let's dive a little deeper into Christina Correa. She has a strong background in finance, most recently as Group Vice President, Chief Accounting Officer, and Business Finance at Lam Research. Next up is Stephen Skaggs with experience as CFO of Atmel and CEO of Lattice Semiconductor. He's been a private investor since 2016. And finally, Ernest Maddock, who was CFO of Micron Technology. He also sits on the boards of other public companies. The board clearly wants these votes in place. That's why they recommend voting in favor of all of them. This is about ratifying or approving the choice of PricewaterhouseCoopers LLP as the company's independent accounting firm for the year. Again, the board recommends voting for it. Here's where we see how much Ouster paid PricewaterhouseCoopers LLP in 2024 and 2023. Audit fees were $1.8 million in 24, down from $224, down from $224, down from $223. Other fees were minimal, just a couple $1,000s. This is the say on pay vote where stockholders get to give their opinion on how much the top executives are paid. It's advisory, meaning the board doesn't have to follow the vote, but they usually do listen. They are seeking stockholder agreement on this proposal. This one is about limiting the personal liability of company officers. Basically, they want to protect officers from certain lawsuits, specifically those related to breaches of their duty of care, as long as it's allowed under Delaware law where Ouster is incorporated. The company claims this helps attract and retain top talent. If officers know they won't be held personally liable for every mistake, they might be more willing to take risks and make tough decisions. Let's see how the executives were paid. In 2024, Angus Pacala, the CEO, made a total of $1.9 million and about $400,000 salary stock awards worth about $1.1 million and about $400,000 in incentive pay. Mark Frickstall, the CTO, made $1.3 million and Megan Chung, the general counsel, made $1 million and about $400,000 in incentive pay. Mark Frickstall, the CTO, made $1.3 million and Megan Chung, the general counsel, made $1.1 million. This section tries to show how executive pay lines up with company performance. It looks complicated, but here are a few key numbers. In 2024, the CEO's compensation actually paid was about $2.3 million, while the average compensation actually paid to the other top executives was $1.6 million, for the average compensation actually paid to the other top executives was $1.6 million. The company had a net loss of $97 million for the year. In 2023, the company had a net loss of $307 million for the year. In 2023, the company had a net loss of $97 million for the year. In 2023, the company had a net loss of $97 million for the year. In 2023, the company had a net loss of $97 million for the year. In 2023, the company had a net loss of $97 million to $1 million. Non-employee directors get paid too. The chair of the board gets an extra $60,000 a year. Committee chairs also get extra pay ranging from $10,000 to $20,000 per year. Susan Heisty made $298,000 in 2024, and Theodore Tewksbury made $256,000. These numbers include cash retainers and stock awards. Here we see who owns the most of Ouster's stock. The Vanguard Group owns about 6.5% of the company, and BlackRock owns about 5.7%. CEO Angus Pacala owns about 3%. Ouster has policies to review any transactions where a company insider has a financial interest, hopefully to prevent any shady deals. If you want to dig deeper, you can get a copy of Ouster's annual report. Just write to them and ask. You can find the contact info in the video description. So what's the story here? Ouster's trying to get stockholders on board with its plans. They're asking for support in electing directors, ratifying the accounting firm, approving executive pay, and limiting officer liability. Ouster appears to be trying to manage costs while still incentivizing its leadership. The decrease in audit fees could signal better financial controls, or simply cost-cutting measures. The move to limit officer liability, while common, could raise questions about accountability. The big picture is that Ouster, like many tech companies, is navigating a challenging environment. They're trying to balance growth with financial discipline, and these proxy proposals reflect that balancing act. There's a risk that the focus on cost-cutting could hurt innovation. There's also the risk that limiting officer liability could lead to reckless decision-making. Dactui overall, Ouster seems to be heading down a path to protect itself in the long run. Thanks for watching Corporate Decoder. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. What company should we decode next? Let us know in the comments.